Today I'm going to be talking about 5 amazing advantages of credit unions. Hey, this is Dustin from Epic Finance. If you can't tell by the book title and by the thumbnail that I am a little biased here. After all, I have been a member of my local credit union for 26 years. I've also been a long tenured employee there and have even served as its president and CEO. Yeah, you heard that right, folks. I'm the former president and CEO of a local credit union. So while the opinions that I'm going to share with you today are biased, many of them are also objectively true. Chapter 1. Credit unions are not-for-profit organizations, while banks are for-profit organizations. This means that everything a bank does, it does it for profit. Everything a credit union does, it does it not for profit. And you will see that influence everything these institutions do, from the way that they treat their employees to the way they treat their members, and even issue fees and interest rates on loans and other loan products. Being not for profit, any money a credit union does make goes back into the accounts of the members in the form of interest. You'll typically see higher interest rates on savings and checking accounts. It is reflected in lower interest rates and lower fees, or it goes back into the upkeep of the building and into the salaries of the employees. So while both institutions offer savings accounts, checking accounts, credit cards, debit cards, that sort of thing, credit unions are set up to serve the community while banks are set up for profit. That doesn't mean that all banks are bad, and that doesn't mean that all credit unions are as awesome as I'm going to try to make them out to be in this video. Chapter 2. Credit unions focus on the community while banks focus on profits. Because banks are focused on making a profit, many of the charitable acts you may see them do are actually cleverly disguised marketing campaigns to get you to become a customer so they can make money from you. Credit unions tend to be more charitable. They have nothing to gain from the profit it may make. This past Christmas, our local credit union set up a campaign to seek out nursing home residents in our community who may not have any family, and helped them by having someone reach out to them during the holiday season, just to let them know that they were thought about and that they were cared for. They also set up a campaign to help underprivileged children in the community by giving presents to children who may not would have had any presents otherwise. Chapter 3. Customer satisfaction. Credit unions often have higher customer satisfaction ratings than banks because, once again, they prioritize their members over their profits. Banks are less likely to work in their customers' best interest if they have a sales quota to meet. Compare that to credit unions, whose employees are taught to be helpful rather than to sell. The overall experience is that the employees are more likely to be friendly. Last week, I noticed one of our loan officers staying late. When I asked her why, she said there's a member that needs a particular service, but the member was unable to get there before 6 p.m. We close at 4:30. So I asked, why can't you just do it tomorrow? And she said, well, they're a long-term member and I just want to make sure I treat them right. I want to be clear that I encouraged her to go home. I don't want a toxic work environment where employees sacrifice family time for the job. But this particular employee has been employed there for nearly 30 years, which also speaks to the internal atmosphere of a credit union. And members love her and she loves them. Chapter 4. Credit unions are owned by its members while banks are owned by shareholders. Whenever you become a member of a credit union, you become partial owner of that credit union. And as such, you are given voting rights. If you so choose, you can nominate and vote on who is on the board of directors and also the supervisory committee of that particular credit union. While the credit union CEO makes many of the decisions and are tasked with managing and investing large amounts of money, they can only do so under the supervision and guidance of a board of directors. And those board of directors are meant to be a wide representation of the members of that credit union who were voted in by you and are average people who just want to see the credit union and the community succeed. Chapter 5. Credit unions are more responsive to member feedback. As I mentioned earlier, every credit union is set up to serve a specific region or a specific demographic. Let me give you an example. Navy Federal. You have to be in the Navy or have a family member in the Navy to be able to join Navy Federal Credit Union. But because this is so, Navy Federal understands the needs of people and families in the Navy better than any other banking institution known to man, I would guess. My local credit union, like many other local credit unions, are designed to serve a specific city or a specific zip code or a specific county. Every member of that credit union and every employee and every person on the board of directors have to live, work, or worship within that county. And because your credit union is set up to serve your community, I think they will better understand the needs of the members. But credit unions are more responsive to member feedback. Being more responsive to member feedback means, if you think it would be a good idea to do a food drive or do a coat drive this winter, write a letter to the board of directors. And they'll discuss it ideally in the next board meeting, which those board meetings happen once per month. It's not all pros, though. There are cons to credit unions. The sad truth is just how Walmart killed mom and pop grocery and Lowe's killed local hardware stores. Big banks steal market share away from credit unions. And there are less credit unions in existence today than there were 5 years ago. This is because of their inability to play nationally or even globally. Many local credit unions play in the millions while big banks play in the billions. And they're often more technologically savvy because of that. And no doubt banks are better at making money. But when you look at them one-to-one in terms of services, they both offer savings accounts, checking accounts, and a variety of loan products and other services. Credit unions tend to treat their members better. So I encourage you to join your local credit union. It's often free to join, the benefits always outweigh the costs, and it's also a way to get involved in your community. This is Dustin from Epic Finance. Hope you enjoyed today's show.